Let's get ready. Let's get ready to rumble!
Benzinga Nation jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of MRNA.
The best trade idea resource out there.
What is up, Zinger Nation? Welcome, welcome. We've got a packed Thursday show for y'all today. First up, we've got our sponsor, Frank Curzio, host of Wall Street Unplugged. After that, at 12:15, we are bringing on the CEO of Summit Wireless, ticker WISA. Breaking news on that company today. The stock is moving a lot. Let me pull that up real quick. So super excited to have you all here with us today. Stock's up 32% right now. But right now, without further ado, let's get to Mr. Curzio. Mr. Frank, how you doing this morning?
Good, man. How's everything?
Good. Or should I say this afternoon now that it's 5 minutes past noon?
Just afternoon. Yeah. Appreciate you guys having me on again. Really love the show.
Yeah. So what's new in your world?
What's new in my world is, I mean, I've been doing this for 25 years. I love the earnings season. It's one of the greatest times, not just to listen to what the big guys are saying, but listen to the conference calls where you can get loads of ideas, like just off of Boeing, manufacturers, which planes are selling, how you see in demand, so teaching our investors, even through our Wall Street Unplugged podcast, of how to look at this and how to read the news, where you're not just reading about GE. They have so many different divisions, and how many companies and parts makers and nuts and bolts plays could really be benefits, or, who's not going to be benefit. I mean, you get a lot of that in earnings season. Right now, it's been blockbuster, right? I mean, earnings have been very, very good, blowing them away. About 20% of the S&P 500 reported. And, pretty much expected. I mean, they're beaten by 20%. Expectations were 10% so far, but every single company is saying the same thing. They're all saying that they're going to raise prices to offset the higher prices that they're seeing in raw materials and commodities. And that's been the theme. And that's what's kind of shaken up the market in the past couple of weeks, because they don't, is it inflation? Is it the Delta virus, the Delta strain? We do have inflation, but you don't have to worry about the Fed. They're not going to raise for over 2 years from now. That they, trap themselves in a hole, which means we're going to have pretty good market conditions going forward. So just exciting that it's earnings season, seeing a lot of companies report good numbers, may pull back a little bit, but creating lots of buying opportunities for some of these names.
Yeah. So I know it's been a couple of weeks since we had you on last. Do you have anything kind of on your watch list right now?
Not even on the watch list. I would suggest buying. I got 3 names for you, and they're all large caps, but, speculative is a lot of fun. I know I've been covering small caps pretty much most of my career. But these are names I think that could double within 12 months. And the first one is Expedia. Listen, the travel industry is going to boom. It's starting to boom. The U.S. is open. Yes, we know the Delta strain and all that BS, and the Olympics. Eventually, we're going to open, whether it's 3, 6 months, whatever. And that's going to even result in more exposure for a lot of these companies. But Expedia has a division within their company called Vrbo, VRBO. So it's vacation by owner. Similar to Airbnb, it's about a third of the size. Now, Expedia's market cap is $23 billion with that under their umbrella, and you have Airbnb at $84 billion market cap. If you're taking that valuation, Airbnb, the growth and everything, it's a smaller business, but that segment alone within Expedia is worth more than $30 billion, and the full market cap is $23 billion. So how they extract that value is you spin off, right? You hear that a lot. Well, the company could spin off. It's not could. Barry Diller runs this company, and with Expedia, he's spun off numerous properties. I mean, he's done it with TripAdvisor, Trivago, and that creates a ton of value. And they're going to end up spinning off this company, and it provides a ton of value here. It's a growth industry. We're seeing, I don't know if you've flown lately. I just came back from a trip last week. I've been flying a lot more. I mean, it's crowded. It's busy. The airlines have incredible pricing power. It's expensive as hell to travel. These guys are starting to order planes right now. People have more money than they've ever had, and household wealth's at a record high. It's a perfect environment. And I love the fact that, we're hearing things about Delta, even though the vaccine, you're perfectly fine. You're not going to get impacted by Delta. But again, in media of scaring the shit out of people, which is fine. Use it to your advantage because you're seeing some of the travel-related stocks come down. I wouldn't be buying the cruises. I wouldn't be buying oil stocks. I mean, they're incredibly ahead of themselves, especially cruises. They have 35% of the boats in the water, yet their enterprise value are trading higher than pre-COVID, which is crazy. But you look at airlines, you're looking at some travel companies. I mean, fantastic buys. I really like Expedia right here, right now.
Yeah, and I don't know if Expedia, if the company acquired VRBO, but I think VRBO might have been actually around before Airbnb. I remember
HomeAway was it? It was called HomeAway where they acquired it, and then they changed the name.
Got it. Yeah, I feel like I remember using VRBO just with my family for vacations, like before Airbnb was even really a thing.
Yeah, and Airbnb is the king of the industry. I'm not saying that they're going to be bigger than, and that's going to be an 80. Maybe they do, but they're executing. You're seeing growth within that division. You saw growth even during COVID. People want these private places, right? So instead of going to hotels, especially during the heart of COVID, and you're seeing growth. But even if you take, 25%, 30% of that valuation, which is about right on price to sales metrics and all these metrics we look at, I don't want to bore you, but at least a $30 billion valuation just with that entity alone. And Expedia is in a fantastic company, which, loads of people use, great customer service. I use it too because I travel everywhere. So a lot of value there, and it's really a growth play. It's something that they could easily double from here. And if they announce a spinoff of this, the thing's really going to take off.
Interesting. I like this play. And hold on, Frank, before we get to your other two stock picks that we have today, I am getting some breaking news from the news desk. I'm getting word from Spencer Israel that Amazon Web Services, AWS, are down right now. Let's go check on Amazon real quick. Oh, Amazon's actually up. But he said FireEye, I believe. FE. Yep, FireEye is spiking on this news. Up. Oh yeah, we can see a little spike. Or no, let's go over to a 2-day chart. Okay, yeah, now we can see. He said Oracle is also affected. Maybe we'll bring in Spencer in a few minutes to get some more clarity on this Amazon Web Services news. All right, so Frank, let's get back to your stock picks. We have two more coming up.
The next one is IBM. I know people are going to roll their eyes at IBM, but this is the chance where you can make a lot of money in this stock. Because when you look at IBM, you see this boring, terrible company. They've been transitioning forever, and I get it. I understand. You're like, it's a dividend company. It's not a growth company. It's a totally different company today. If you take a fresh look at it and forget about everything they did, it took years, many years, right, for them to transition into the right industries, whether AI and data analytics, and cloud, hybrid cloud. So cloud now accounts for more than 50% of IBM's profits. That makes it a growth company. It's a massive high margin business. We're seeing what the competitors are large: Google, Amazon, Microsoft. That's their growth engines. That's why they have $2 trillion market caps. Earnings per share projected to grow at 18% plus annually over the next 2 years, right? Makes it a growth stock, yet it's trading at just 13 times forward earnings. Just came out with blockbuster numbers, also pays a 4.5% yield, which I would love if they cut that in half and use the billions to invest back in the company. But the 4.5% yield with interest rates going to stay low for a very, very long time is attractive. That dividends easily covered by cash flow. But you're looking at a high growth company trading at a multiple because of its past and how terrible it's been and the execution's been. The last 2 quarters, fantastic. That Red Hat acquisition was awesome. It's growing like crazy. It's grew 20% Red Hat alone. But you're looking at a totally different company today, focusing on the growth markets. People still view it as, hey, it's IBM. It's the old IBM. It's a different company today. I mean, that showed in the last 2 quarters in numbers. Again, 50% of that of sales, of profits, not sales, but 50% of profits are coming from cloud, which is amazing. And I bet you that's stuff most people don't know. I couldn't even believe when I saw it. So when I look at IBM, it has a $125 billion market cap. You're looking at its competitors, the 3 I mentioned, Google, Amazon, and Microsoft, $2 trillion market cap. They're not going to be those companies, right? They won't be those companies. But could they take a little bit of market share? Absolutely. I mean, they have a hybrid cloud a little bit different from everybody else, but that's a $1 trillion market. Could you see this at 300 million, 400 million market cap? I think you can pretty easily, especially giving the premiums that their competitors are getting. And these guys are actually starting to grow just as fast as them. So under the radar play. I know when people see IBM, they want to fall asleep. That's how I want to feel. But that's where I do the best and make the most money in stocks, when I look at things that people hate because they're usually trading dirt cheap, and they transition, new management team. And now when this thing's trading over 200, people are going to say IBM's back. You could buy it now before 200, make a huge gain on that thing. I think this is an easy double within 12 months. The quarter was absolutely fantastic. And I think this name's going a lot higher, and it's a safe name, a good play if you think inflation's coming, if you really truly believe that the Fed's going to raise rates and tighten, which they're not going to do anytime soon, but still it's a really good play in this environment, a safer play with a ton of growth. So a name that I like right now.
Yeah, I think we've got a couple good things for IBM right now. You mentioned the cloud space. I mean, we've seen what the cloud aspect has done for Microsoft, kind of propelling that stock throughout the past couple
Amazon,
years.
Right?
Amazon, of course, but yeah, Microsoft is like the one kind of competitor to the cloud with Amazon. So now if we see IBM getting more of that market cap, that it will be good for or market opportunity, it'll be good for the stock. And then also, I think part of Biden's infrastructure bill has to do with kind of bringing back some semiconductor manufacturing to the States, as opposed to like currently most of it's being done in Taiwan.
Yeah.
So a couple big things for IBM there. I'm definitely adding this one to my watch list as well. All right, so we've gotten Expedia, ticker EXPE, and now IBM, ticker IBM. I'm ready for the third one, Frank.
All right, this is a layup, and it's a large cap, and it's Delta. So again, there's lots of speculative names. You have to be careful in an inflationary environment. The small caps are telling us that it's an inflationary environment, guys. I usually come on here and have really cool stocks, loads of upside potential. Right now, you have to be careful with companies that are not making money. Even though the 10 years low, and people say, well, the 10 years low is no inflation. There is inflation. The borrowing rates are going to go up tremendous on these guys. Cash flow is getting cut because they don't have the pricing power the large cap companies have. So, but their costs are going higher. And that's what you're seeing. ESG companies get nailed. You're seeing even some meme stocks get nailed. You're seeing them. So I don't want to throw you into something that we could see a little more downside. And Delta is a layup from here. I mean, it's trading at the same levels. You bring up a chart from November, right? November is when they just approved the vaccine for use, right? The emergency approval. That's the levels it's trading at now. It's not like the cruise ships, which are trading above those, well above those levels. These things are still 20, 30, 35% below their pre-COVID highs. They're seeing the U.S. numbers start to explode now. They just reported earnings. You look at American Airlines also reported great numbers. Again, they're ordering planes. You're going to see the global markets open up. It might take 3 months. It might take 6 months. It's okay. Once they start opening up, and they will, they're going to have to. People are going to start riding the streets internationally. If they don't, I can't believe that they're not allowing spectators in Tokyo, which is 2,000 cases a day that they're getting, which is insane. That's going to open up. Even if it doesn't open up, Delta has upside. Once that opens up, this thing is going to explode. I mean, you're going to see, one, they have pricing power already. Two, people have more money than they've ever had. Right? We have household wealth at record high, everything at record highs. And these people have been locked in their houses. They're dying to get out. You can see that for anyone who started traveling. All the flights, they're jam-packed. Airports are jam-packed. That's going to be globally. And now that they have that pricing power, people have the money to pay for these flights. I mean, not only Delta, just pick any airline. I love the pullback right here because of the Delta variant, but lots and lots of upside. Again, I think these three names that I gave you are pretty much layups with low downside and lots of upside over the next 9 to 12 months.
Yeah, that's interesting. I mean, I like the kind of recovery plays, like back on, like it was for a while, it was dead and now it's back on. And it's interesting to look at the different airlines. Hold on. I don't know why this chart's being a little wonky. Let's go here. Let's go to a 2-year. So I think it's interesting looking at the different airline companies and seeing so Southwest was $57 before the COVID crash. And now we see it had gotten back up above its actually pre-COVID levels, and now is a little bit below. Whereas Delta hasn't gotten ever since the COVID crash to its pre-COVID level,
60 level,
of its $60 level. So I certainly think we will see this creeping back up toward that $60 level. Other ones that have not gotten to their pre-COVID levels, Boeing, of course, the stock has been affected by other things outside of COVID, but this was at around 345 before the COVID crash, trading at 220 right now. So that's an interesting one. Let's go to American Airlines. See, Americans. Oh, shoot. American is also not at its pre-COVID levels. No. So, yeah, I mean, I like So is there a reason, I guess, that you're going with Delta over the other airlines?
Delta has the newest fleets. They have the highest margins, and by far the best of the major airlines in terms of customer service, satisfaction, loyalty, miles, members, and Sky Medallion members. So, when you're looking at the whole package, these guys have gotten it right. This stock was soaring pre-COVID, and then everything got nailed. I mean, nobody really accounts for like a 90% cut in business, right? I mean, when you're a good CFO, you're like, okay, here's what we do at 10%, 20%. Here's what divisions we cut. Here's what people we cut. Nobody accounts for a 90% like what we saw at COVID. These guys got money from the government immediately. They're using that. Some of it is super low interest rates. Some of it, they're not going to have to pay back the whole thing, which is amazing, even for some small businesses. But one of the biggest points here is it's not that, hey, all these reopen trades you have to buy. When you listen to CNBC, listen to media and things like that, stations that people watch, they're lumping all these things in one basket. And it's not all reopen stocks, right? It's not all the stay-at-home stocks. There's certain stocks within these and certain sectors within these that work. Like the airline's going to work. I wouldn't go into oil. Oil has seen a massive move. Some of these stocks are up 7 to 10x in the past 12 months, even with the latest pullback, and they're cutting costs, which is kind of a red flag, right? Your stock's up 10x, everything should be going well. Oil prices are up and you're cutting costs. We see the ESG movement coming in, less drilling. So, be careful what you buy. It doesn't mean you buy all the reopen trades, but we're going to reopen, and some areas like airlines, like Expedia, are still trading at significant discounts to pre-COVID. I think they easily get to those levels. These are two companies that have pricing power and have a lot of upside.
Yeah, well, I mean, I love it. So just to recap, I'll throw them in the chat. We got 3 great tickers. We got EXPE, Expedia Group. We got IBM, and now we got Delta Airlines.
Yep, perfect. Perfect.
All right,
and we talked one last thing. We talked a lot about cloud, right? We talked a lot about cloud and how, with IBM and cloud you go to WSUpodcast.com, and we had a fantastic segment with Greg Yanoli, who's one of our partners. And we talked about a sector that could actually replace cloud in 10 years. And it's not a joke, because Amazon, Google, and all the majors are investing in these private companies. For our podcast, that's what we do. We discuss ideas. It goes out to over 100 different countries. And then we get so many experts from all over the world emailing us and saying, hey, you're onto something. This is big. And, we're just starting to research this topic now, but you can learn a lot more from that at the podcast. But it's very, very exciting stuff. And, so just throwing that out there, because we did talk about cloud. Cloud is a massive, massive high growth, high margin industry, but storage. I mean, these guys are paying billions for storage. It's just a matter of time. You look at the electricity and all the ESG and all the, people getting pissed off at Bitcoin and electricity usage. Wait till it gets to the servers and the usage of cloud and these massive. It's not just a cloud. It's people think storage in a cloud. No, it's not. These are massive servers, huge farms, billions of dollars. We're going to expand data by how much? 20, 30, 50 times over years and years and years and years. They have to find new ways to store this at a cheaper cost. And there's new technologies that are coming out. One of the ones that we talked about is pretty exciting. So.
Yeah, people are asking what is the sector. You got to go check out Wall Street Unplugged. Yes. I put the link in the chat. It's also in the description. So go check out Frank's podcast. Frank, thank you as always for joining us today.
Thanks,
looking forward to next Thursday. Thank you for the great picks. And real quick, y'all, smash the like for Frank's picks. We need some more likes. We need to get to 100 likes before Jason comes back on the stream to give us his stock picks, the stocks that he's been trading. Jason's got some great plays. Frank, enjoy the rest of your Thursday. Have a great weekend.
You too, man. Thanks for having me on.
Of course. All right, y'all. Coming up right now, we have the CEO of Summit Wireless, ticker WISA. We had breaking news on the stock today. We're going to discuss that, as well as getting some background on the company. So without further ado. Mr. Moyer, how are we doing today?
I'm doing fine. How are you doing?
I'm good. My name is Aaron. Luke, I'm sorry I had to step out for a meeting, so I will be taking over today. I've got the chart pulled up for WISA right now. Summit
WISA, baby. WISA.
Sorry about that.
That's okay.
So let's see. So before we get going into this breaking news we had today, can you give our audience just some background on the company?
Yeah, so Summit invented a wireless technology that is best in class. And what it does is it lets a consumer get that theater experience by making it very simple to set up a wireless home theater system in your house. And when I mean simple, it's as simple as setting up a sound bar. So all you have to do is plug your speakers into the wall, plug one HDMI cable into the TV, and the WISA transmitters will find all those speakers, and now you have a full home theater system in your room.
Got it.
And you know, we took the hard step of developing a standard around it. So if you go into the WISAassociation.org website, you'll see all the brands that are members of that association supporting the standard. And these are tier one brands, right? You're talking about LG, you're talking about Hisense, Clips, Harman. Harman's the biggest audio company in the world, owned by Samsung. So tier one CE brands are working with us to build out this ecosystem.
Yeah, I mean, I want to try this because, you know, it's always a pain to try to get different speakers to connect, you know, and so the more seamless and easy it is, the best. So today we had the press release come out. We broke the news on Benzinga Pro that WISA launches an Amazon storefront.
Correct. Yeah.
So what does this mean for the company?
Well, this is a big step forward, right? So we've been working on this standard for quite a few years, but this says there's now enough brands marketing on Amazon that it is there's enough there that we can bring a store around all the WISA products. Now, we know the WISA products that are on Amazon. They may not be set up right. You may not be able to find them, but we know them. So we've created this really nice store. You can look for WISA ready TVs by LG and Hisense. You can look at speakers. You can look for transmitters. All the products that are out for sale in Amazon are now aggregated in one nice looking store that educates the consumer about WISA and gives them an easy way to find products to buy and configure. And you know, the beauty of WISA is you can buy an LG TV and Clips speakers, or you can buy a Harman subwoofer and Clips speakers and a Hisense TV, and they'll all work together.
Awesome. And then, you know, so I know you kind of overlaid the WISA technology, but what should investors know about the WISA standard and technology? And is this better than Sonos?
It is. Well, Sonos is a great company. They have a technology and firmware that streams music around the house well. But if you look at it from a home theater perspective, you have a sound bar with Sonos. And that's an $800 sound bar. Whereas you could go out and say buy a Platin Audio Monaco 5.1 surround sound system for $999. Now, what do you get? The thing with a sound bar is that's a 36, 40-inch wide audio field, right? But if you have a home theater system, just like in a movie theater, you now have a speaker in the left and the right corners of the room, front and back. You got a center speaker where the sound bar is. I mean, so you get that theater experience of all the action in the movie, right? You get that theater experience of that stadium experience of going to an NFL game and hearing the crowd around you, all different, and hearing the ref coming out of the center speaker. So for home theater, we are a better audio experience and can be a cheaper solution. Now, you can also buy $80,000 Bang & Olufsen stereo speakers with us in it. But for the broad consumer base, WISA offers a much better home theater experience than any soundbar can.
Yeah, we're getting a couple good questions in the chat. We will get to those soon. But Mr. Moore, I remember back in the day when surround sound system was like the coolest thing that you could get in your house. And it was like the biggest deal in the world when you went over to someone's house and they had surround sound. But the company reported 181% year-over-year growth for Q1 and guided a 250% growth in Q2. What is driving the growth?
You know, what's driving the growth is adoption. So if an investor looked at when we did an IPO 2.5, 3 years ago, we had 6 speaker companies, 1 TV guy using our technology, a second TV guy coming. Now you can see that we're guiding to 6 TV companies this year, and we've got more than 25 speaker brands that'll be using Summit's technology. So it takes time to go through a sales cycle when you're launching a new technology, but what people are starting to see in our income statement is all those association members that have been working on projects for the last 18 months, they're starting to hit our P&L.
Got it. Yeah, that's exciting for investors there. Definitely worth checking out. And again, we broke this news on Benzinga Pro this morning. You could see the stock reacting, jumped all the way from about $4 up all the way to $7, coming back down now around $5.30. But definitely interesting play there. And then yesterday you announced that Toshiba TV was adopting a WISA sound sense certification. What is the importance of TVs for WISA's ecosystem, and who else is kind of participating in this?
Well, the TV's the hub, right? So if you think about the smart TV, the consumer now has this great big display in their room like a theater, right? And the smart TV has all this streamed content that's coming in from Disney Plus, Apple TV, Netflix, right? You got a surround sound system. But before WISA, what you couldn't do is easily set up a surround sound system in a room, right? You got to drill holes if you could. If you're in a condo or a high rise, you can't, right? And we eliminate all that. So the TV helps the TV adopting WISA or one of our platforms helps the consumer understand that this TV can connect directly with WISA products. Now, for example, we announced Toshiba TV. The biggest one is LG. If you look at LG Electronics, their OLEDs, their nano cells, their laser TVs, those are all WISA ready. So that means you can put a very cheap USB WISA transmitter into it. They have all the menus set up inside the TV as part of their user interface. So it's a great solution to get that theater experience in your house.
Yeah, I mean, like I said, I remember back in the day when it was such a pain to try to get surround sound. You know, you needed to do essentially construction on your living room or TV room to get all this done, and now it's becoming more and more seamless. The integration with the smart TVs is something that I'm very excited about. We've seen how far that technology has come just in the past few years. So, Mr. Moyer, let me get to a couple questions that we have in the chat. First, from Jay Scarborough, does it support Dolby Atmos?
Yes. So we support 8 channels, which is best in class with super low latency. And that would allow you to do what they call a 5.1.2 Dolby Atmos implementation.
Got it. And then from Sheldon, regarding the standard, is WISA licensing the technology to these companies? How is this generating revenue, royalties? Yeah,
so currently, the current product we're shipping is a custom set of chips. We put those onto a wireless module. So if a product has been certified, a speaker or a transmitter, that means they purchased a module from us, which for $9 or $10. So in the case of, say, Enclave's Home Sin, which is about which is $1,100. Well, that's a 5.1 surround sound system. So you got 6 speaker modules and 1 transmitting module for $7.
Got it. And then last question from the chat, again from Sheldon. When you say WISA products, are you talking Summit products or Summit technology? I guess he's asking for some clarification there.
Yeah. So if a product is certified, they bought a module from Summit. If they are WISA ready, then they have optimized their user interface through firmware to be ready to connect to WISA products, but they have not bought something in the case of LG or Toshiba.
Got it. And then sorry about this. One more. Daniel's asking, is there anywhere where customers go to demo this product?
There are various retailers that have that product out there. depending on which brand and what territory and what continent you're on. The biggest retailer with the most selection actually is Amazon. So that's why we worked with the brands to create that store so everybody could see the various price points. But you can go into a Bang & Olufsen store, you can go into some B&H, Best Buy stores, some regional retailers, but Amazon's got the largest selection. So we created a store for the consumer to get a good idea. And I'd argue at $900 or $1,000, this is a easy way to test drive an investment thesis.
Got it.
Take a return, right?
Yeah, and we
you
do
don't think
have,
it's worth $1,000, you send it back.
we do have the link to the Amazon in the chat. So if you want to go check out the products there, please do. Mr. Moyer, thank you for joining us on the show today. Looking forward to having you back on it, as we have more news develop. And yeah, thank you for taking time out of your busy Thursday. I know the company had breaking news not only today, but yesterday as well. So thank you again for joining us.
All right. Thank you.
No problem. All right, y'all. That was Summit Wireless, ticker WISA. WISA, very interesting company there. And y'all, we're at 88 likes right now. We need to get that up to more than 100 likes before we can get Jason back on the stream. Jason was telling me he was making some massive trades, some of his biggest yet in his investment account. So if you want to hear these big trades from Jason, we need to smash the like, get those up to 100. I want to hear the trades that Jason was making. I think you guys do too. So let's get those likes up and we will get him back on the stream. All right, let's see what else is moving. What in the chat should we check out? Fidelity site down. Any news? I would assume Quebec, and this is without me knowing, that this might be due to the Amazon web shortages being down. Let's go see if Amazon, how the stock is looking for Amazon. It seems like anytime Amazon has news, even if look, Amazon, last time I checked on the show, it was up about 1/4%, and now it's up a full percent on news that the web services are down. Let's go check Riot. We can check some other Bitcoin stocks. Ooh, Riot's pretty flat today, down about 1/4%. That's interesting. Usually Riot and Mara are either moving like one way or the other. Let me see what Bitcoin is doing today. Bitcoin over the last 24 hours is up slightly. So let's check in on the other Bitcoin stocks. Mara up. So it looks like all the Bitcoin stocks are kind of flat today. SOS down a little bit. And SOS, I do have to say, is probably my least favorite out of these different Bitcoin stocks. I tend to like Mara the most. Let's see, IPA. What is that? Beer company? Oh, wow. All right, so this is a biotech play. Let's see what the news we got on here. BZ Wire. Okay, so it looks like they had results coming out today neutralizing SARS. Okay, so they had news coming out regarding the Delta variant. All right, I just got note from Jason that, I'm sorry to switch it up on y'all, but now the like goal is 150 likes. So before we get Jason on for his big trade of the day, we need to get to 150 likes. We're at 115 right now. That's 35 more likes. I think we can do it, Zinger Nation. We just need 35 more people to smash that like button, and we will get Jason back on the stream. Let me check H-Row. Let's see what this one. Arrow Health up about 2% today. Let's see if we have any news coming out. This was back from Monday. Nova Bay Pharmaceutical Partners with Harrow Health. Promote prescription Avenova. Interesting. All right. So I tend to stay away from these biotech plays because they are just so volatile on any news coming out that unless you have like some sort of a competitive advantage in trading these biotech plays, it's hard to kind of determine what the price action will be. But there are certainly some very interesting biotech plays out there. So if you have any other favorite biotech plays, drop them in the chat. Let's get a quick check on the likes. We are at 133. We need 17 more. 17 before we get Jason back on the stream. Let's go. Let's see what the big Qs are doing. Let's see what Facebook's doing. Facebook's up about 1%. See how the chart's looking. Okay. We've had some strength in Facebook. It looks like it's getting back up to this previous resistance level at 350. Daniel in the chat saying Jason's acting like Mariah Carey. That's funny, Daniel. Daniel, by the way, Daniel, let me know who you changed your picture to. I know it used to be Mason Mount. I'm not familiar with all the F1 drivers. Is that Max Verstappen? I don't know. Amy, my displays, there are different setting I should be changing. I'll check on this stream after. If it's blurry for anyone else, please let me know. We will get that worked out right away. We are at 139 likes, 11 more. We need 11 more likes to get in. Okay, so he's saying Max, of course. I thought so that's good, I guess, and I was right. That was Max Verstappen. All right, so it seems like more and more people are talking about F1. I think that's Mitch behind the oh yeah, that is Money Mitch there. Mitch, do we have any plays, any stock plays that are related to F1 that we can get into? Because I've been seeing more and more. Spencer Israel here has been watching the Netflix series about Formula One racing. I've been hearing it on a podcast I listen to, Pardon My Take. All right, here we go. Chris, thank you. FWONA. FWONA. Liberty Formula One. So is this the actual Formula One like group, like the league? Can you just buy into the league? Or is this a different? All right, it's coming back up to its pre-COVID levels. Chrisopedia in the house, delivering as always. He wrote an article on it. Let's check it out. I like that. So he's saying, yes, this is just the actual league. Awesome. I mean, look, as I said, I've been hearing more and more people talk about it, which to me is always a sign. Like if you hear that sentiment picking up, that like all of a sudden people in America are talking about F1, that can be like a good sign. Like, oh, maybe we need to get into this. So I'll definitely have to check out this one. It looks like it is. Oh, well, it says NASDAQ, but the ticker looks like an OTC to me. So Chris, maybe can you provide me some clarity there as to why the ticker looks like an OTC ticker, but it says NASDAQ? Okay, Amy got it to work. Just started having issues 2 days ago, but only with certain videos. Great. All right, what tickers else should I check out right now? I'm looking. I want to know what is moving. What is everyone looking at? What's on everyone's watch list? We have, all right, only 4 more likes needed before Mr. Raz steps on with it. All the Liberty Media ones are weird 5 symbols. Okay, that's interesting. All right, I'm seeing one for PK. PKKFF. Peak FinTech Group. We got some good price action going along the past. Let's see, dropped all the way down to 162, back up to 202. I'm not really that familiar with this commercial lending industry. It lends money to small and micro businesses in China. Okay, so this is a fintech based in China. All right, we did hit our light goal, 156. As soon as I get the word from Raz, I'll bring him on and we'll get his stock picks of the day. Let me check on Baba, chat favorite, up 1.3% today. You know, this is one that there's a lot of fear around different Chinese stocks right now. Let me go to the chart. Let me go to the dailies on the, and I mean, I think this is a discount. The other day we saw this dip below $200 and I said to Spencer, I was like, look, I think, we're going to be kicking ourselves for not picking up Baba below $200. But Spencer had some reservations about the Chinese stock play. I think he was a little worried about what's going on, what could potentially happen. But look, I think if you're going to invest in any Chinese company, Baba is a good way to go. Let's also check on CQQQ, which is Invesco's China Technology ETF, down 31% today. But if you go back just a few months ago to February, this ETF was trading all the way at $107, and now it's down to 78. This, of course, was fueled by kind of fears with different Chinese plays. But I mean, look, I don't like China is growing. It's the fastest growing major economy, soon to be maybe in a few years the biggest global economy, surpassing the US. So despite the fears surrounding investing in Chinese companies, I think it's a good play. I actually sold some of the CQQQ to get off margin, but this was one that I was holding. Daniel Stein, buy shares, not stocks. Stay away from Chinese stocks. What's up with so much of the internet going down? That is due to Amazon Web Services being down, which we've talked about, but Amazon stock doesn't seem to care. We've seen this before. I mean, the day that Jeff Bezos announced that he was stepping down, the stock like went down for a second and then shot back up and ended up green. I have a theory about this. And I think it's because people know that Amazon is just such a behemoth of a company and that they will continue to be strong, that any dip possible, no matter what it's regarding, people will scoop in and buy it up. That's just my personal theory. Don't know if it holds up, but that's me. 99% of Americans invest in China every day. That's, yeah, you know, it is what it is. All right. Ramon wants us to check out Wish. This is one that we've talked about on the show before. Oh, we were supposed to do our thing where we order something from Wish today and see when it comes in. But Luke had a meeting, so we'll be doing that either tomorrow or at a later episode. Wish or Amazon is my favorite to buy options. Yeah, Joe, I mean, I like playing Amazon too. The problem is it's just so expensive with options. Wish, look, I like it as a trade down here. I don't necessarily like this stock long term just because, look, I mean, Wish is essentially you're getting like fake products. So I don't know how sustainable it is as an actual like business. Like what's the returning customer like? You buy something on Wish and you end up getting it and it's like a cheap knockoff. What would make you want to go back and and Tiny Pie saying, who cares? Just order the crack pipes. Yeah, I want to do it with Luke. That's a segment that we need to do. Yeah, Wish invest in Chinese products. Oh, Ramon, you sold $8 puts. I like that. You get some capital for selling these $8 puts. We have seen the stock get down below $8, but if it hits that level, then you just exercise the option and get the shares at $8, which I think is a good price. You could obviously sell those shares that you got at $8 if the stock does bounce up from there. So let us know, Ramon, how that trade is working out in the chat. I bought something, and see, that's what I'm talking about. If you as a customer goes to Wish and buy something and it was so crappy, you are never going to go back, right? So I just don't love the overall business model, but as a trade, it eventually Wish will get down to a level that it will bounce from, so we can like it there. Let's see. I used to encode items in Wish when it started and all the items were from AliExpress. Yeah, I mean, AliExpress is like the same thing. You can order kind of cheap products from China. I've ordered some like jerseys, some, cheap jerseys from AliExpress that actually end up being decent. And it's just like, I'm not going to go out and pay $150 for a Red Wings jersey, say it is, but you order like a slightly knockoff one off AliExpress for $20. I don't have a problem with that, but I think you run into trouble when you start ordering the more expensive items. Like if you try to buy a camera or something like that on Wish, then you get a cheap little camera that you can't even use. It's not fun. All right, let's check on Chipotle. Oh, wow. Chipotle's legging up here. This stock reported great earnings a couple days ago. The stock is just so expensive. It's almost a $2,000 stock. I think we need to see a split in here to help out some retail and traders, get some more interest in the stock. But look, I mean, I don't see Chipotle going anywhere. I do think it might be getting a little bit overextended. Let's go to the 2-year on here. We're on the daily. So if we go back to, let's go zoom out a little bit. Let's go back to pre-COVID. The stock was trading about $900. It's almost at $1,800 now. So it's almost double what it was trading pre-COVID. Of course, Chipotle was one of the restaurants or chains that really did well during COVID through their online sales and the retail sales and delivery and all that. Happy said he bought a BattleBot robot. It was cardboard. Happy, let us know in the chat. Was that off of Wish? Was it off of AliExpress? Give us some clarity there. Ramon says he bought $10 knockoff Yeezys. They lasted a week. So yeah, I mean, I think it's tough because like the company, it's a good business in theory. You can go here and get cheaper items than you can on Amazon or anywhere else. But I just don't think for customers, they'll get a lot of return customers. I mean, not only are the items cheap, but it take a while to get there. Yeah, let's check in on AEHR. We had Ben on the show yesterday, gave us some insight on this company. And after, so let's do this. We're going on the 2-day. So Ben came on yesterday, which was the 21st at about this time. The stock was at like $6. He gave us his pitch on it. The rest of the day, the stock skyrocketed all the way up to $9. Now it's trading off a little bit today. But if you liked his DD, if you liked the stock, then, you know, I think we still do have room to grow. He said this company could go from being a $7 stock to maybe even an $100 stock at some point. Oh, Happy saying the BattleBot robot that was cardboard came from wish.com. AVIR, another pharmaceutical play. Again, I stay away from these biotech companies just because I feel like I don't have a good edge in them. It feels like to me that I'm you know, kind of like at the casino playing roulette or something. You know, you never know. From a chart perspective, though, this looks pretty good. This looks like we see this rounding bottom, kind of consolidating down here. So from a TA standpoint, from a technical analysis standpoint, without even looking at what this company does or any news on it, this looks very interesting. Because a lot of times when we see this, when it hits down to this level, we see this big downtrend. These are daily candles. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, this traded down until it finally hit a level that the market liked, that it started to consolidate at this level and it stopped dropping from here. So it looks like we have this around like $18 where it's found support. And now we're seeing an uptrend established. 1, 2, 3, 4, 5 days in a row that we've gotten green candles. So I'm going to add this to my watch list again, without even looking at the company, without looking at what it does, just from a chart perspective. And I, by no means, am a TA expert, but I like to know that I know enough to be dangerous. Let me do this. I want you guys to check out. If you're a watcher of the show and you don't have Benzinga swag yet, you should get some swag. Check out our website, swag.benzinga.com. Let me know what merch you like. Let me know what merch you'd like to see more of. And here we got a nice little promo for it. All right, y'all. Let's see what else we've got in the chat. KGC. Let's check that out. Kinross Gold. I've been staying away from gold stocks, and here's why. Because we've seen inflation numbers come out that haven't been great, CPI numbers that have not been great, and yet gold stocks are not doing anything. So to me, that's a sign that the market is saying, regardless of inflation fears, we're not rushing to buy gold. And kind of the same thing with Bitcoin and other cryptos. Like, that's the whole thing. I thought that was the whole point of cryptos, is that, hey, this is going to fight against inflation. If we see inflation tick up, then you should see Bitcoin tick up, which hasn't been the case. Hasn't been the case for gold. My theory on that is that the inflation fears are a little bit overblown, and that's why the markets aren't going to gold and Bitcoin. POAI. Any thoughts? Predictive oncology, another biotech play. Again, tend to stay away from these, especially the very speculative ones that do not have revenue. But kind of similar chart to the one we just looked at with the AVIR, where it's kind of found a bottom and consolidating. Shelly saying transitory. Yep. The inflation is supposed to be transitory, but we keep hearing about it. Where's Jason? That's a great question. He's hiding from us. I don't know why. I think he might have had to join the meeting with Luke, so might be stuck with me for the rest of the show. CTRM. Nope, not Citigroup. Let's go to CTRM. Castor Maritime. See what this company does. Castor Maritime Inc. is a provider of seaborne transportation services for dry bulk cargo, including iron ore, coal, grain, steel products, fertilizers, cement. I don't even know what this is. Bauxite, sugar, scrap, and other materials. What's the play here? What's the play here, Minnesota Scrapper? Let us know why you like CTRM. Cole's saying that Chipotle would do well with a 8-to-1 split. That's interesting. I don't even know if it needs to be that big of a split. It could be a 4-to-1. Okay. So the play behind CTRM is that it's a meme stock. All right, that's interesting. CEMR, let's check out that one.
Did we get to 100 likes? That's what we need to know.
We did. We're at 160. We're at 168.
How did it get to such a high number?
Because I told them, I said, hey, Jason's not coming on until we get 150. At first it was 100.
Said 100. I heard it, and I was like, that was a low number, 100.
I know, and then I realized that I shouldn't be lowballing you like that you're worth at least 150 likes, if not more. So now that we got Jason on, we're at 172 right now. Let's get 38 more likes to 200. We can do it, Zinger Nation.
Yeah, Zinger Nation can do anything. We can accomplish a lot in a day, a week. So one stock that I bought, guys, during the show, during the interview, and Aaron Bree, I need you to follow up with John Scully to bring on Sternberg. I know he'll come on. I want to bring him on. Is this for the CEO of Zeta Interactive? I bought Zeta, ZETA, in relative size. I bought 1,500 shares. John Scully was on this week, right? I think Tuesday. I bought it at 615. We are up 4% today, 3.74% in total, up 5.45 today. I like this, and I'm going to hold this for definitely a bit. ZETA. This is Jason Raznick buy, 100%. I didn't even tease it. I went right to it just now. You know those YouTube videos that like tease shit forever? Nope. I just went to it. I bought ZETA. Yep.
That was a great play. We got two different tickers we talked about with Scully, ZETA, and then of course CELU. But smash the like. We're not, teasing anything. Jason's coming out hot with what stocks he's bought. ZETA, great movement today. I don't know. Let's see if that was on news or if it's just.
And guys, I won the golf match last night. I putted better. My next issue is I got to work on not moving my hips on the downswing because that's when I hit some stuff thin or pull. So I have to just like move the weight over without moving the hips. Let them come after. That's the next challenge I have. I can bring Lexi on. You guys want me to bring Lexi Thompson as a guest? She'll come on. If you want Lexi, I'll bring Lexi. Your call.
Yeah, we got a great little montage of the shots that include Lexi Thompson, Tiny Pie here.
How about any of like the talking or anything?
Yeah, we had a good clip in there where I was filming Griffin Johnson talking about like, we're out here at the thing talking about it, and while I was filming him, a fan came up and asked him for a selfie. So that was a good clip to have in there.
Have I seen this video? I don't know what you're talking about.
We'll get it to you soon.
When have you seen it?
Tiny Pie and I are putting our final touches on it.
I love
189 likes, 11 more to 200. We'll get there.
I love how you guys make Tiny Pie do all the work. You got all these video editors, but Tiny Pie.
He's the best. He's the best.
Yeah, but you haven't tried anyone else. We have 12 video editors. He's just the one that I've told you guys about. Like, there's 12 others. You guys should, not kill this guy. The other stock guy, he is good though. The other stock that I've been owning and have increased the position is Bill, BILL. We're up 58% since Luke gave it as a pick. It's up again today. So that's Bill. I love how they're consolidating the accounts receivable space. They bought 2 companies in the space. Divvy was one, a little different than if they bought my friends at Invoice to Go. So I'm owning Bill for a long time. And I'll probably own Bill for the next 10 years. That's another stock that I'm seeing a lot of success with. I'm not looking as an immediate gainer, but it's one that I can see. And then, interesting enough, I own Slack forever. Finally, my Slack shares are gone. The transaction's going through. I see some weird number code for my shares that I've left over, so maybe they'll transfer over. Voyager was up to 1365 today. VYGVF. It was moving. When it got to that level, there was one inside I think that sold a big lot of shares. So you may see Voyager back at the 1360 level or 14 level if that seller goes away. I am long Voyager, so keep that in mind. I just want you guys to know. And that's what I got. And I own Eli. Oh my God! No. Hold on one second. Hello? No. I'm on my show. That's why I'm live right on my show. Sorry, guys. All right, bye. I thought it was an emergency call. I apologize, guys.
Okay, good. Thank you, Daniel.
I went to normally answer. I thought it was an emergency situation.
Daniel said I'm getting better at the interviews. I appreciate it, Daniel.
Yeah, I answered because I thought it was all of you guys would have answered if you know why I answered. Okay. Anyway,
copy that. Going back to the Bill.com. So earlier when Spencer and I were talking about different software as a service plays, is there a reason? Do you like investing in companies that Benzinga is a customer of? Like Bill.com?
Every company that Benzinga is a customer of has gone up like 400% over time. And the reason is because hold on one sec. Can you hear me still?
Yes, sir.
The reason is because we're a digital first platform. Wait one sec. I got to do one thing. Hold on. We're a digital first platform, and a lot of companies are, retail based and aren't digital first, aren't like, they're old line retail. They're eventually going to catch along and realize in the cloud is better, virtual is better. And so that's why I think so.
All right, Happy's saying we need 3 more likes to 200.
Jason, don't even know how much money is on his account, and that's the goal. Oh, okay. All right, I'm late to this meeting. Will you close it out, man? Peace.
Yes, sir. Yes, sir. Congrats on the win yesterday again. All right, y'all. Coming up right now, we are restreaming EA's special coverage. So if you're into video games, stick around. Excited about that. And y'all, it's been a pleasure. Let's get 3 more likes to 200. Smash the like, share the stream. Helps us get some popularity, some more views. And that way we can curate more trade ideas so we can help your portfolio grow. That is the goal of this show, to provide you with great trade ideas. Let us know. If you have any feedback, please email us at powerhour@benzinga.com. I'm dropping that in the chat. All feedback is appreciated. Even if you're like, oh, I love the show, but I hate AB, I can take it. Email us. Peace and love, y'all.